Okay, morning, 7:17 a.m. and a this current formation is very much similar to the bread and butter setup. Okay, so we have the 12 midnight candle over here. This is the open here. This is the open here. Um, um, it's not exactly, you know what? It's actually not. Yeah, it's not perfect. It's not. In any event, we know that we were declaring this to be a. Where is it? It's actually right here. See that? Institution order flow entry deal from a D1. That's right here. So we were expecting price to come up above that and then drop. And it came up above it a little bit. And it also ran into a D10 fair value gap discount side. That's way over there on the other side. So this is where we expect the price to come up and run and run away. You see it took out the high over here, this one out here. It's gonna be like the stop above that. And it came a little bit into this area here. So this could be the move out of here. Now the bread and butter setups, the bread and butter setup usually likes to see a stop run in London and then a run, but instead we have a this is a 12 midnight, and it's really good when there's a run below the 12 midnight one. Um, and then price runs out of there. Instead, it just ran so up, and so this being the midnight 1, 2, London open, it's already up there. So basically, instead of London stop hunting the low below here, it actually stopped hunting up here instead. So but in any event, what happens with the bread and butter setup, you see price run away from the low, from midnight, you see price run away from there during London. And then in New York, open 719 right now, price then does a pullback to then run higher. So there wasn't a London open stop hunt, which is what I was expecting to hear. Not that I had it in mind at the times, but I was just expecting that to happen. This is the after actually video. So I did not get filled. Let's drop down to the 5 and just go back to where we were left off at. Okay. Oh wait. Let me go back to H1. Okay, let's just mark up the bread and butter, even though it's not perfect. It's not, but let's just analyze it and see how things play out. Let's mark it up on the hourly. And I want to stress an error that I made jumping from the hourly straight down to the 5. Watch, I'm going to show you why you should drop down slowly. Oh, shucks. I'm going to show you why you should drop down slowly like I generally do. Like I usually do. In one moment, and this is the H1, that premium. There. side. Okay. Okay, so under the rules for for this type of move, price comes into runs into the fair value, into the PDarray, and then launches off. You're getting in when price comes down to that PDarray. The only reason why I may elect to paper trade get in it is because it can make a higher run above this. I know this is the formation. I mean, it hit it here, and this is a daily institutional order flow entry deal. So it may be able to push higher, and I could see it took out this high here, and then it will make the M formation here. So that M, this may make a high, low, higher high. So this low will come to this premium side of the fair value gap. Look across here. This would possibly be a recapitalization of this order block here. So it may come to the mean threshold of it, like right here. I mean, this green line here, a monthly high order block, December 2019. This might be where they bounce off at and launch. They may come bounce off here and then come up, so it'll do the bread and butter setup. And remember, the bread and butter setup is not for a long-term move. It's a scalp, also 20 to 30 pips. So we go from here. There goes 20 right there. So even just coming back up to the top, just take this out. We got 26, 20 to 30 pips. See? And then you will get in for the reversal. You will wait for confirmations and such. This would be a early move to the downside. That would we have news coming out. We do have NFP week. This is NFP week, I believe. Let's see, that's Tuesday, Wednesday, Thursday, Friday. Non-farm payroll, yes. Yeah. Okay. And then we got this news here also. We have all this news here. So, yeah. Okay, so what we would do is get ready to let's go drill down. Okay, also I want to show the error from the other night. So let's come to the 5 minute. Take this off so we can stop across. Also, a lot of the markup is ruined from the computer crashed. Okay, so I wanted price to come to tap here and then come down. Instead, we note that it did the institutional order flow entry drill. Medical alarms are going off. I had to come to my kid. Okay. All right, so we see here where price, where we saw that if this gets ignored here to here, this may only come up to here and then drop. If it does, and it comes down, and we remember I was mentioning, I mean, it doesn't even look like it now, but yeah, I did mention it had this little little imbalance here, and that's exactly what it went to and did this move. And you see this is little, and you're like, oh, so like it should come down to this here, or come down, because it's just so small, and you're like, I don't think, now. But look, if I would have come to the 15-minute, and now look, this gets ignored, okay, and this is what we got. Okay. Okay, this is what we have on the 15 minutes. So if I would have, if I would have, so if I would have chopped down slowly, I would have been able to mark this off here. And this is more clear. This is more clear. Let's see if this has a wick on it. Yep, and that even has a wick. So you see this high, so this low, so this is all everything is covered except for here and here. All of this is covered. So this came down here, this is there, everything's covered. So the only thing that's not covered is right here. And I think this one also is covered. Going like, yep, no imbalance. Possible little tiny one here, which we did see on the other one also. But this would have been the area for the reversal here, and this would have been selected. This is significant. This is a significant fair value gap here. So yeah, and as you see, it came in and filled it, and then turned around and left. So this here would have been put up there. Yeah. So, and on this here, this trade wouldn't have even been set up. If I would have looked at this here, there's no. There's no, the structure we saw on M5, this doesn't look like anything to get into. So this attempt to sell down to here, the distance to this is wacky. The distance, see, this is it right here. But this structure here wasn't calling for something like that, period. Even taking these two upgoes is just, yeah, it went underneath the order block here if I went just for these, but just not a significant structure. So the trade, the attempt to sell down to buy would have been eliminated. All right, so don't forget, the only one I barely ever do is the 30-minute, but just drill down slowly. The 30-minute, once in a blue I do use it, and I see a significant spot there too. So but just drill down so that you can spot areas that, again, the higher time frame is stronger than the lower. So if there's a fair value gap on the 15, that may be respected, or it may blow through your lower time frame trying to get to a higher time frame order block. So that's why it's good to do that. All right, okay, now back to current. Oh no, I wasn't even paying attention. Okay, let's get back to the current. Okay, here we go. All right, so we have price keep here, bounce into this order block does have this open here, came down deeper into it, so it's going up. 15 right now. Okay, so this is our area of interest here, and so we would be looking for a 3-candle pattern to occur, fractal to occur here, like what's happening now. This is a 15-minute chart, and the time now is 35. It's 10 minutes to go on that. So yeah, that could wiggle around and do all that stuff if it wants to. Now, if you was trying to look for structure to sell to buy, you would come over here. Now this is nice. See, high, low, higher high. Pull this out. This is the breaker. I'm gonna pull that out all the way, and you will see that it's coming up to do a strike here. Go to the lowest point. The highest point. There. Oh, so you know what? This actually now, see now, sometimes you can see more stuff too on the 5-minute, which lends to the other one. Let me pull out some. All right, so here we have this here. So you have an order block here, which is the last order block before clearing up here. I'm gonna pull out a bit too, but let me just analyze this part. Comes up, comes down. This here may be ignored. You need to ignore if it's too, But look here, we have a fair value gap here. We have a volume imbalance here. Or actually like a gap. So this here, the move that's happening now, may be it's possible that this is the move to go all the way up, because the top of this H1 fair value gap is a part of the structure here, the structure before it goes up, and it just happens to have this here. So this move here, it's possible that this could be the move to go to the to take out this high here before it then turn it around. And the area of interest for up above this here, even though I don't really want it to do that, you can come a little bit above it, but the next significant area is this here. It's the D1 consequent encroachment of the SIBI, and I said below is institutional order flow drill. That's this one here. So all right, so what was I gonna say? Oh, all right, so okay, so yeah, I had to run back to the machine again. Okay, all right, so we have yeah, price came. What happened to why is it pulled out? Oh, this one. Okay, so yeah, so I was saying that I think that this may be the because if you look from here to here, this here is significant. So this may have been the strike of, not that it made it to it, but this could be that, where price turned around, because this here, this premium side is attached to this structure here. Now what I'm supposed to do is I'm supposed to pull out some, just take a look at it from that point of view. And yeah, as you see, this is the symmetrical swing that was made, and then it'll create the new, like a reset to continue going higher, and that's what it did for here, and and it came down, and so this is like the beginning of this move here, and on the bottom of that is this here, and this is an order block here prior to this move here, and as you see, this is an optimal trade entry right here. That's cool, right? But anyway, we see that price has come down and struck this right here, this PD array. So now the 15-minute, of course, is stronger, but it doesn't mean that price will, definitely come to the next PD array. Now the next PD array on the 15-minute is this down close candle, which this one is involved in the two. This is the last down close one, but they're like overlapping. So let's take a look. Look at this low here. Low is 328. Let's look at the low here. 375. Okay, so they didn't strike. Oops, did I look at the wrong thing? The high, 369, 375. 1 pip. That's very close. So, so this could be the move. So they could be coming up to take out this high here. And we have, this is yesterday's high. Friday. Friday's high was right here. Let's see if it has gone 10 pips above it. And did 10 to 20 pips it can do. Let me pull this down. There we go. Get my other point of entry, point of interest into view. Let's come back to this here. 20 is over here. So at the moment, it has done roughly 10 pips above the previous day's high, previous trading day's high, and it could go 20. It can go, very close to this and turn around. And if it were to do that, 20 would put it right here. Definitely possible. Looking forward to coming to the middle of here to here. Okay, that's if we're going with the idea that price is going down. Yeah, that's if we're going with the idea that price is going down and that this is not the bottom. But this very well could be the bottom. But I'm going with the downtrend. We do see that the dollar, it just tapped the discount side of the weekly fair value gap. So there may be a bounce down, and that's what's going on now. You know, all of today's movement up in AU could be that bounce off of that on the dollar before it then turns around and goes back up. So for at the moment we have on USHF, you see this move here just took out all these equal highs here, and this move just took that out, and you can see from bottoms, tops here to here, and then this one will be here to there. So there's no divergence right now. Let's go to the high time frame, see if there's any divergence happening. Give it a moment to make sure this line is ready. And don't forget, this is USHF. So draws on liquidity, if this price is going up, we have this here, we have this, this high here, we have this measured. We talked about measuring that, and so what could have been there? We have this sellside imbalance. We have these equal daily highs here. We have a high here and high. So we have all highs, we have imbalances all over the place. Here. Here, highs, equal highs. There's stuff that's saying, hey, I want to go up. But I'm gonna look out for the trick out is in that P week, and we will want a deeper run into this weekly money down that's below. So we see there's a recapitalization over here of this fair value, of this order block here. On the top of it there, see it? So the order block was used here. Boom. Boom. Smash this here. Come into this order block. Come up. Next, because it struck so many times, once, twice, we would expect price to break above it and then use it as support. Boom. That's exactly what happened. So looking out for recapitalized order blocks, to happen. Drop down, clear out those, bounce off of that, came up, maybe broke above it, came down and bounced all over it, and launched off. So on the 15, we see that there was other confluences that will have prices respect this fair value gap here. And we have the way this looks, how long this wick is, but this body is so thick, this might have been a place to also ignore, but I don't know. So the high on this candle is 367. The low on this candle is 391. 367. And it's a low on this one, 375. About half of from here to here. Oops. Why are you looking at the right one? 367. 8 pivots. Yeah, so this here is going to be broken to low cost. 1, 2, 3. You can look for more bounce. Weekend pattern occurred here on this PDarray here. This here is an order block, or it can be that it's ignored and this is a fair value gap. Either way, this is a 3-candle pattern. It did not come down deep. After the 4th candle, look 1, 2, 3, 4. Sometimes price can come down and then do it, especially if the 4th candle didn't take out highs to the left, which it did. So if this was to drop down and come to the other trade entry over here, then that's a possibility to get in for a rise. So the way I'm looking at this is the first leg here. here. Price came down out from trade entry area, spiked through, closed out from trade entry about, and we see that it does come up to the possible encroachment of the SIBI. And I've seen target 1 or 2 be a move and then price drop down and turn around. But yeah, they want to get price on there. Look how quick it went over to H4. See right here at the bottom of the this order block here, and this is a balanced price in the H4. Selling the balanced price range all the way up there. Okay, time now is 9 o'clock. This candle just popped out. 9 o'clock candle just started. Price came all the way up to the constant encroachment of the daily SIBI, sell-side imbalance. Right up to it, and now it's 9 o'clock. I'll be looking for price to possibly go deeper into this here possibility. It can even come up to this here, this strong number. Sorry, I'm on 100 number here. Old number. And that will bring it into Tuesday or Wednesday being a high. You can feel it over this. We'll come up a bit above that. But let's go down into, were we in 15? Yeah, we were in 15. So remember I said we have this swing here, and it didn't give a good enough pullback there. But then this candle was coming down, and I mentioned that even after this fourth candle, price can still come down. And in my head I said buy. I didn't drop anything. I just left it like this. Now I must admit that on the 5-minute chart there was this pull above this here in the structure that I saw there, which was a 3-candle pattern on the 5-minute. Let's just go look at it. Okay, see this here? 1, 2, 3. I almost got fooled here. I'm starting to question whether this is a stop above these here, and then 1, 2, 3, then the pull back here and get in for the sell. But again, waiting for the second leg is very important. If I would have been thinking that, because there was no second leg, it ran away. And also understanding and remembering the higher time frame PDA arrays and structures supersedes the lower time. So we see right here, price came down within this fib pull. So let's just see how the fib pull would have been. Wait, let's go back to the 15. And then we'll come here, because this is the one that I would have entered in on. And now we'll go back to the 5-minute. And let's look at the structure here. So 3-candle pattern was over here, price came up. Fib drop would go here. Come up to here. And we see that price did come down into this order block here, recapitalization of that. This I think will be ignored. So yeah. And then this here is covered with this here. A really tiny opening there, but I don't think I would have went down for that for it to go all the way down there. Of course, I have the hindsight of this horizontal line, which is a possible the 3-candle fractal swing high or low from years ago. It just stays on the chart, and it's still price still bounces around them. So that would have been something there to help me. And yeah, if this was to be ignored, then we would have the fair value gap. Well, let's see. I think that made it would be a fair value gap right here. So this candle's high, and this candle's low, and the price came down. Let's look at the Okay, this is what we have a result of. So we see here, yesterday, 5, 6, 7, 8, 9, during Asian Open, price did not come down enough to take my order, and I got and since these were pendings, then I was taken out on the sell, on the attempt to sell to the to entry for buy. The price did buy as predicted, and price came up to here and then went even further, all the way up to the consequent encroachment. Let's click it real quick. Let's bring it up. Of the SIBI, of the D1 SIBI, went right through the D1 fair value gap discount side and the D1 institution order for entry drill. So that was not an order institution order for entry drill because it went so high above. It came all the way up into the consequent encroachment of it. So this was the low, and the high I did not mark up there, but I did mark up the consequent encroachment, which this is what the price came to. Price did drop down, and we did enter in some entries on the 5-minute. Over here we had an entry around here with some arrow. So over here, and an entry here. And 40 and 30 pips were pulled all the way down to here, to here. I left them in, didn't declare like a checkout of them, but did see 3-to-1 here, and as you see, just to show that snatching in both directions is possible. And price did turn around and come back, and then took out these equal highs here, and it did close above the bodies here, but this stop hunt that occurred here, the high was not taken out. Okay, now remember, going back to the weekly, okay, so going back to the weekly, we saw that when the week first started, it was all the way down here. For there to be this to become a fair value gap or a SIBI, we would need this to close out. Even on, let's go to the daily. So yeah, so this is what we had on the daily. For the daily, we had a SIBI, and we had price come up like this strong. From a pull from here to down here. Let's see what we got. We'll pull from here down to here. We are at the 62% point right now. So we can see price right now it's at the consequent encroachment right now. And this is a 3-candle pattern, 1, 2, 3. So we can expect price to do a pullback, a little pullback, and then launch up higher, possibly going for over here. But the consequent encroachment area is a spot where price could turn around and roll over. In the daily, we see it barely came, it just nipped in here a little bit, came down. So we do feel price should drop further. And if this is this down move up here, if this is the second level of redistribution, I wouldn't expect price to come up so high to then drop back down. I wouldn't expect that. But what I will do is I will drop out, which I didn't before, but I will do it now. I will drop a line here. And let's edit it. Okay. Let's label it AUD low. A part of level 2 distribution. Just to give it more information on it. So yeah, it's just an idea. I thought what price would come up to and turn around. Looking over here, that might line up with some. So this high and this low. So I go and go lower. Yes, much higher than this here. This last downfall looks like that's lined up with it about. So this last down before it rises up. We'll see what happens. They'll do what they're doing, and we're looking for footprints and fingerprints of what they may do. So, let's go back to H1. Okay, so on H1, what happened to the line that I had there? Oh, how did we get pulled up? Was I on a? Oh, let me pull out. Nope, it's not dropping back. Wow. I don't know how to got all the way up there. Okay, let's zoom in a bit. Oh gosh, really? All the way up there. Okay, so this was a part of this here. Okay, so we have we have H1 divergence here. We're still trying to figure out if the divergence of the dollar is where you're doing your measurements from the tops or the bottoms. If if this is which one takes the lead. So if it's the dollar, this would be a bearish divergence. So this would be regular bearish divergence here. And remember, it's inverted because we're doing okay, so we have that on there. Okay, so we have so we have the bearish divergence has occurred. We have this run down and back up. It could still be preparing to make that big run down. And as we see here, we have up here is the OD1 low that I just dropped out, low part of level 2 redistribution. So this can be an area that might be targeted right now. All right, so but we also see that the blue lines represent. Let me pull out some. Let's see. Okay. The blue lines here and here, this is at the high and low, so we see automatically a 3-candle fractal pattern. So we would be expecting a drop and rise on the for the pattern that we look at, but it's at a point where if price is being pulled from here down, it's pretty much, well, at the moment we're doing it from here, and we are we are above equilibrium, so we can see if it comes up higher before it does a drop. So it's just at a point where you just gotta be careful. It's not deep into a premium. And so it's not deep into a premium, so you just gotta be careful. 3 candle pattern did occur, but we will be waiting for a pullback and then rise. But again, we are in a downtrend, so we wouldn't expect high moves. Again, though, we do have to be careful not to stick to our what we believe and not look at what the market is giving you. So this is also a determining point if whether or not the market is going to, if this is a preparing to make a reversal. So this can become a giant W. Um, if, if it wasn't to come, I wouldn't believe it would come all the way down and take this out. But you never know. Remember, back to the weekly, over here on the weekly, we would need this to form to create a possible institutional price, institutional order flow entry drill here on the weekly, which means that we would need price to close, within this area, to close, basically consolidate in a little bit of consolidation. Doesn't have to, but we just want to see this here next week pop out, and then it does the institutional order flow entry drill and drop down to clear to run deeper into these into the liquidity that's down below here. This is not a good enough run into the liquidity down here. So we would expect. So we're talking about having price for a week before it runs down there. It is NFP, so it could be pretty interesting. So we'll see what happens. We'll see what happens this week. This weekly candle here has NFP in it. So let's just see what happens. All right. Later.